Hello, I'm Ryan Lightfoot-Brown from Fund Caliber. Today, we're joined by Richard Kaye, co-manager of the elite-rated Comgest Growth Japan funds. Richard, thank you very much for your time today.
Thank you, Ryan.
Now, Japan is a country that's overlooked by many investors. Why do you think that is?
I think there are three big reasons. One is that the market went down for about 20 years until about 2009 or 2010. The second is that Japan is simply far away. It's linguistically, geographically, and culturally separated from Western investors. And the third is that Japan is under-researched. The number of companies which are simply not covered or that are covered by a handful of analysts who write the same thing as each other, if I may be very rude, has made Japan a difficult market to understand. We, of course, think that those three problems can be overcome. The market has started to run. We're at close to a 30-year high in the Japanese market. The domestic Japanese investors coming back to it. The problems of language can be overcome if you have a local presence. We obviously have one. That's why I say it. And lastly, the problem of research can be overcome if you know what companies you want to look for. And Japanese companies are increasingly opening themselves up. And that's why we think that now is an interesting time in the Japanese market.
Yeah, certainly sounds like it. Now, Warren Buffett, probably the most famous fund manager in the world, has recently invested in Japan. What was it that he was interested in? And does this mark a sort of a change in sentiment towards the country?
Ryan, I think that Warren Buffett's investment is a game-changing event for Japan. We've seen evidence that Mr. Buffett has been looking at Japan investments for over 10 years, but he's chosen to make those investments now, and that represents his confidence in the improvements of Japanese governance. It represents his confidence in the potential of the Japanese market to realize value in the companies that he's taken stakes in. And it signals, especially to US investors, but to non-Japanese investors generally, that Japan is open for business. It's ready to be invested in. If I may speak very personally, on our fund, we've had a number of US domiciled Japan searches, people looking to invest in a Japan dedicated fund since Mr. Buffett made that announcement. Again, I say it's game changing.
Well, that sounds all very positive. Perhaps now turning to sort of wider issues. Japan is a country that's been less affected by the pandemic than many others, and the economy, as a result, has held up an awful lot better. Do you think this means it stands itself in very good stead going into 2021? And perhaps has it benefited from China's strong recovery from the pandemic?
Thank you, Ryan. Yes to all of the above. Japan's economic slowdown in the second quarter was much less than other countries. If I'm not mistaken, the United Kingdom had over a 20% GDP decline in the second quarter. Japan had something like a 7% GDP decline for the reason that you mentioned, the pandemic relatively meager impact. And the recovery in the July-September quarter to, I think, over 20% annualized GDP growth. The recovery that we're seeing right now as we speak to our companies day by day in this quarter all speak to the fact that Japan rebounds quickly. Your other point that Japan is sort of harnessed to the engine of China or Greater China is very valid as well. We invest in a lot of companies for whom the main source of profit is China. Yes, we do a Japan fund. Don't adjust your set here. But actually, a lot of our companies are Chinese in their profit source, and we make no secret of that. They just have Japanese names. They're listed in Japan. Companies like Pichin, Daikin, Unicharm, Sysmex, just as you were saying, Ryan, are getting their growth from the recovery of China after the pandemic, and the long-term growth of China as it emerges into a developed economy with a strong consumer base and big technology needs, which Japan can supply.
And Japan itself has seen a change of leadership. We've had a new prime minister come in after Abe had to step down for health reasons. Do you think his reforms, which are so crucial to the economy, will continue? And what does the change of leadership mean for Japanese companies?
They will definitely continue. Those reforms will continue. And the reason is that Suga is very much like is very much like the leadership of Apple after Steve Jobs. He's a slightly, if I may say, less charismatic, but very hands-on, very pragmatic and very practical leader who has a clear vision of what Japan needs to do. The exciting thing is also that Mr. Suga is not new to this story. He's been the implementer of the previous Abe government, and he's been the spokesperson of the previous Abe government. He was the one meeting the press every night. I've probably seen his face every day on the evening news in Japan. So he's continuing, and if anything, accelerating the so-called Abenomics process, which has benefited Japan for the last several years. I think there's a renewed focus on deregulation, on digital economy, on trade diplomacy. Just a few days ago, he signed a major trade agreement called RCEP, which embraces many of the Pacific nations, and apparently is one of the most comprehensive trade agreements ever in terms of the number of items where tariffs are reduced. Yes, Suga is a dynamic figure. And I think he opens the door for Japan, again, as you were saying in your previous question, to do business with China, as well as to get out of its own way in terms of domestic policy.
So with all of that in mind, obviously some great driving forces behind the country, what's your outlook for the Japanese stock market in the coming year?
I think we're at a very exciting time, and I think that we could go back to our previous peak in the Japanese market. People who are listening to this may not immediately be aware that Japan is the only major market that's never gone back to its peak. I mean, FTSE's had a big crash several times. It's come back. We had Black Monday and all of these things. It's come back. We had the Wall Street crash and we came back. It took many years, but the US came back. We had Lehman crisis. The US came back. Japan never came back. We had, I think, a high 30,000 figure on the Nikkei in March 1990, the month before I first came to Japan. And Japan never came back. But right now, we're approaching that. And as we approach that, there's a tremendous psychological positive flow for Japanese individual investors. More importantly, there's a tremendous interest by Japanese institutional investors in their markets. And they, in fact, are the ones driving the market today. And that's why I think that, in fact, the market could go back to its previous peak. We're already at a 30-year high. I can't see why it would not push further, given the dynamics of the market. Very importantly for us, as fund managers, the earnings of the companies in Japan support that. We're not looking at egregious valuations for this market at all. And we have a number of companies in our fund, actually, which do the same thing as companies in US funds, but they're actually cheaper than those. And that's why, in fact, our fund over 5 years has, if I may say, slightly outperformed even the S&P 500, the US index, because we can buy great growth cheaply. And that's what Japan lets you do. And yes, I think next year we'll probably see more of the same.
Well, that's certainly a very positive picture. Thank you very much for your time today, Richard.
Thank you very much, Ryan. Thank you for everybody listening.
And if you'd like to find out more about the elite-rated Comgest Growth Japan funds, please visit our website, fundcalibre.com. And if you like what you've heard from Richard and want more content from us, don't forget to like and subscribe below.